Connecting the world's data. This is Newsstream.
Welcome to Neural Pulse, your daily AI briefing. Today is December 11, 2025, and it feels less like a regular day and more like a moment where something just snapped.
Yeah, kind of composite crisis singularity. That's a good way to put it.
It's this moment where the big narrative, the dream of infinite, frictionless tech growth,
Just slammed into a wall of physics, of geopolitics, of cold, hard reality.
and we're starting to see the bill, the actual cost of this transition we're all in.
That's our mission for this deep dive. When you connect the dots from the sources, the stock market shock, the attacks on civilian infrastructure, the stunning shifts in who gets to be a legitimate leader, you map out this incredibly precarious environment.
So we're going to try to understand that transition cost.
Exactly. The cost of a world trying to find a new and, frankly, a more dangerous equilibrium.
Okay, so let's start where we always have to, with the money. Markets got a tiny, very short-lived bit of relief.
A little sugar high. The U.S. Fed cut the funds rate by 25 basis points.
Down to a range of 3.50 to 3.75%. And this was framed as a preventative measure, right? Because unemployment ticked up to 4.4%.
Right, but the ghost at the feast was stagflation. Inflation is still just stuck. It's hovering near 3% CPI. So the fear is they're not easing because the job is done.
They're easing because the economy is just weak.
Exactly. And before anyone could even process that, the real cold shower hit.
Oracle's earnings report.
Yes. The stock dropped over 10% after hours. And it didn't just hurt Oracle. It dragged NVIDIA, AMD, the whole NASDAQ down with it.
So why? Why did one company's report cause such a huge systemic shock to the whole AI story?
Because Oracle laid bare the central paradox of the AI boom right now,
Which is?
the massive gaping chasm between demand and our ability to physically deploy the infrastructure for it. I mean, look at their numbers.
The demand is definitely there. Their RPO, the remaining performance obligation.
It's skyrocketed, up 43% to over $52 billion. That's guaranteed future revenue. Tells you that every CEO out there is desperate for AI.
So the orders are flying in. Why did the stock crash?
Two devastating reasons. First, even with all those orders, their actual revenue for the quarter missed expectations. They can't turn the orders into cash fast enough.
And second,
Their capital expenditure, their CapEx, for 2026, they revised it upward to around $50 billion.
$50 billion. So huge demand, missed revenue, and now exploding costs.
That is the deployment gap, or as some analysts are now calling it, AI physics. It's the simple, brutal reality of it.
The software is ready, but the physical world isn't.
Precisely. We can't build data centers fast enough. We can't get the cooling systems delivered. And the big one, we can't get enough electricity to the sites. It's like having 1,000 Ferraris and only one gas pump.
The bottleneck is the utility pole, not the silicon chip.
You got it. And that creates what the market is now calling CapEx fear.
The fear that all this money being spent won't generate returns for a very, very long time.
And you saw that fear ripple all the way to Japan. Softbank Group, SBG, dropped almost 8%.
Because they're also all in on AI infrastructure.
Exactly. Suddenly they have the same risk profile as Oracle. Huge investment now, with returns. Maybe, someday, when the power grids catch up. It's a fundamental shift in focus, from AI potential to the immediate physical cost.
And it seems that physical world isn't just slow, it's also becoming actively hostile.
That's a perfect transition. We're seeing this friction move out of the purely military space and into our everyday civilian infrastructure.
Which takes us to India. The GPS interference issue there has become a major national security threat.
It really has, especially around the huge airports like Delhi and Mumbai. The government confirmed it, almost 2,000 incidents in 2 years. And the key is it's getting much more sophisticated very quickly.
And this isn't just some kid with a jammer. The sources get very specific about a technique called circle spoofing. What is that, and why is it so much more dangerous?
So jamming is just noise. It blocks the signal. Spoofing is, it's telling an elaborate lie.
A lie to the airplane's navigation system.
A very convincing lie. The attackers broadcast a fake GPS signal that looks real, and it tells the plane's computers that it's flying in a tight, perfect circle around a point on the map that isn't real.
So the pilots are looking at their instruments, and the plane is telling them it's flying in circles, even if it's flying straight.
Precisely.
Yeah.
And you can imagine what that does. It creates total chaos in the cockpit. It triggers false terrain warnings.
The EGPWS system, the one that screams, "Terrain, pull uppy!"
Yes. So pilots might think they're about to crash into a mountain that isn't there. And even worse, It makes the ADS-B data totally unreliable.
And that's the data air traffic control uses to see where all the planes are, to keep them from hitting each other.
That's the one. So this is electronic warfare, deployed against soft civilian targets. It sows chaos, it tests capabilities, and it gives the attacker plausible deniability.
It normalizes a new kind of friction right in the systems we depend on to live.
And that normalization of friction is happening everywhere. In the military space, in the political space, the old guardrails are just gone.
Let's go to East Asia. The gray zone escalation between China and Japan near Okinawa.
A very dangerous incident.
Yeah.
On December 6th, a Chinese J-15 fighter jet painted a Japanese F-15 with its fire control radar, FCR.
Okay, explain why that specific term, fire control radar, is so important. It's not just tracking.
No, not at all. Surveillance radar is like just looking around. Fire control radar is the last step before you launch a missile. It locks on, calculates a firing solution. It's the digital equivalent of putting your finger on the trigger.
Japan obviously called this extremely dangerous.
And Beijing's response was just as aggressive. State media accused Japan of victim blaming, said the Japanese jet was the one harassing them in their exercise area.
A total rejection of the facts and international norms.
It is. And the U.S. immediately backed Japan, leading to joint B-52 and F-35 flights to counter the existing China-Russia patrols. The whole region is now a solidified front line.
And this is all happening against the backdrop of what the sources are calling the Syrian shock.
Which might be the most cynical geopolitical realignment we've seen in decades.
It's incredible. Ahmed Al-Shara, the man who led the al-Qaeda-linked al-Nusra Front, is now being recognized as Syria's provisional president.
From designated terrorist to head of state. And the normalization is happening at light speed. The UN Security Council lifted terror sanctions on him.
And the U.S. repealed the Caesar Act, the very law designed to isolate the Syrian regime.
Opening the country up for investment, especially from the Gulf states.
So what's the new rule here? It seems to be that stability, no matter how cynical, trumps everything else.
That's it exactly. Pragmatism over past affiliations or values. The Gulf states need regional stability to protect their own interests, and they've decided he's the one who can deliver it. The cost of continuing the old fight is just too high.
So when you have this level of chaos, physical, military, political, it has to change how people think about value, what they spend their money on.
Absolutely. And you see it perfectly in the luxury market. There's been a huge reversal.
Hermès has officially dethroned LVMH as the most valuable luxury company in the world.
And that's not just a stock price thing. It's a failure of an entire business model. LVMH and Kering, which owns Gucci, they built their empires on the aspirational consumer.
Selling to the global middle class who wanted their first big-name luxury item.
Right. It's a mass-scale model. And when economic fear hits, that aspirational buyer is the first to pull back.
But Hermès, with its famous scarcity model,
they're thriving. Because they intentionally limit things like the Birkin bag, they turn them from consumer goods into investment assets. The ultra-wealthy see them as a safe asset, like gold.
So the rich don't stop spending, they just spend differently.
They consolidate their spending on things that hold value. And at the same time, a huge factor is crippling LVMH in its most important market.
The rise of luxury shame in China.
Yes. Driven by the government's common prosperity slogan, it's become socially and politically risky for the wealthy to openly flaunt their riches. A big logo on a bag is now a liability.
So spending is shifting from visible goods
to experiential luxury. High-end wellness, private education, exclusive travel, things you experience, not things you show off. And the forecast is a 20 to 22% drop in China sales for those big logo brands in 2025.
And to contrast that, you have the breakdown in the physical economy, in Germany, of all places.
Volkswagen, the symbol of the German manufacturing model. They're facing factory closures and massive strikes over a proposed 10% wage cut.
Which is just unheard of for VW.
It signals a crisis point for that whole economic model.
Yeah.
High wages, high quality, strong unions. It's struggling under the weight of high energy costs and the brutal transition to EVs. They're hitting their own reality wall.
Okay, so let's synthesize this. We've gone from AI capex to GPS spoofing, from fighter jets locking onto each other to what's happening with luxury handbags. What's the one theme that pulls it all together for you?
The theme for December 11, 2025 is the high, unavoidable cost of transition. Every single story is about that. Financial dreams are hitting the physical cost of power grids. Geopolitical stability is being paid for with cynical bargains. Social narratives are dictating what has value.
It forces you to see this really fundamental contradiction. We all have this vision of an exponentially growing digital future of smarter and smarter AI models.
A world of software.
Right. But that future has to be built on the back of an increasingly fragile, volatile, and deeply physical world. So the biggest problem facing the next great AI model isn't the algorithm. It's the requirement that this digital dream has to be anchored to a world of contested airspace, collapsing norms, and power grids that just aren't ready.
That tension is going to define the next year.
Subscribe to Neural Pulse. See you tomorrow.